Good late afternoon and thanks for joining us. I'm Sage, you're watching 𝐾𝐤𝐴 TV live from Sydney. This is the last show of the day, the last trade, and there's no better way to wind down the day than with today's market close commentary. So let's dive straight in. Australian shares ended choppy in today's session, lower for the third day as the mixed corporate earnings and rising COVID-19 cases kept investors jittery. Index heavyweights BHP, Woodside Petroleum, Sims Netwealth Group and CSL witnessed sell-offs after reporting earnings results. The ASX 200 dropped 0.12% to close lower, and during the day's trade the index declined as much as 0.5% to hit an intraday low. Among the individual stocks, technology firm Pro Medicus rallied over 16% to emerge as the top gainer on the ASX pack. The stock rallied after an imaging tech company posted strong earnings for the 2021 financial year. Some of the other notable gainers, however, were oil producer Beach Energy, Domino's Pizza, real estate tech firm Domain Holdings Australia and healthcare firm PolyNovo. On the flip side, the global mining major BHP Group topped the losers list, falling nearly 7%. Investors gave thumbs down to the stock after it announced to sell its petroleum business to Woodside Petroleum to create a new, bigger petroleum entity. Some of the other top laggards were financial firm Netwealth Group, metal recycling firm Sims and automotive parts manufacturer Bapcor, as well as the gold miner Pilbara Minerals. And next up, let's see how the sectoral indices performed today. The equity market witnessed a broad-based buying as 8 of 11 sectoral indices ended in the green. The A-REIT sector gained the most and settled with 1.8% gains, followed by utilities, which rose over 1.7% as well. Among others, telecom and industrial sector also closed with over 1% gains, and the financial information technology and consumer staples indices also saw surges in buying. Bucking the trend, however, materials sector emerged as the worst performer, falling 2.9%. Among others, healthcare and energy index also ended lower. The utilities stocks emerged as the biggest gainer today, with the index heavyweights APA Group, Origin Energy, AusNet Services and AGL Energy rising the most. In the banking space, all Big Four lenders, Westpac, ANZ Bank, NAB and Commonwealth Bank ended higher. In the materials space, index heavyweight BHP was the worst performer, followed by Rio Tinto, Fortescue Metals and Pilbara Minerals, among others. And meanwhile, the gold stocks witnessed surges in buying owing to the rise in the price of the yellow metal. The spot gold prices rose 0.3%, up to $1,790 as the weak macro data allayed some concerns of an early tapering by the Federal Reserve. And the sectoral leaders, Silver Lake Resources, Evolution Mining, Newcrest Mining, Northern Star Resources, all ended higher. And now, before we look at the shares that are in the news today, it's time for a short break. Hi, I'm Sage, and get ready to take the crypto ride with me on 𝐾𝐤𝐴 TV. Watch the Crypto Buzz every Tuesday and join the excitement at 𝐾𝐤𝐴 TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, Sage, on Crypto Buzz. Keep watching 𝐾𝐤𝐴 TV. Welcome back. Thank you so much for joining us. Sage here, and you're watching 𝐾𝐤𝐴 TV live from Sydney, and this is the last show of the day, the last trade. In this segment, we'll shift our focus now onto the top 10 stocks that created a buzz today. Shares of Pro Medicus rose over 10% to reach a record high of $62.31 Australian after it posted strong earnings for the 2021 financial year. The company posted full-year EBIT of 42.6 million Australian dollars on sales of 67.9 million Australian dollars. And next, the share price of the buy now, pay later player Sezzle dropped 5% down to $6.65 Australian, pairing its previous session's gains of 15%. The provision for uncollectible accounts spiked to $13.8 million for the June quarter. The company said the bad debts rose as it invested in expansion and took on large enterprise clients. Meanwhile, its revenue declined while underlying merchant sales jumped. Also on the radar today, shares of index heavyweight BHP Group declined as much as 9.4% to hit an intraday low of $68.69 Australian on a plan to exit the petroleum business. The company has decided to merge its petroleum business with Woodside Petroleum to create a bigger entity. The BHP shareholders will own a 48% stake in the new company, and the company has also decided to end the dual listing of its shares on London's FTSE 100 index, which means it will be listed on the ASX only. Meanwhile, the iron ore giant reported underlying profit of $17.08 billion for the full year ended June 30th, 2021. It has also rewarded shareholders with record dividends of $15.2 billion for the year, and shareholders will receive a final dividend of $2 per share come September 21. Also making the news, shares of Australia and New Zealand banking group climbed nearly 0.9% to reach $28.67 Australian after the lender issued Pillar 3 capital updates. The bank revealed that its home loan book declined by 300 million Australian dollars to 280.3 billion Australian dollars during the June quarter. The shrink in home loan book was attributed to customers who are using low rates to pay down the debt faster. It also reported a common equity Tier 1 ratio used to measure the financial strength of a bank of 12.2%. The bank said that the recently announced $1.5 billion Australian dollar on-market share buyback is expected to further reduce the CET1 ratio by around 35 basis points or 0.01%. And here's the next company to look at. Oil and gas major Woodside Petroleum. Shares dropped as much as 4.4%, down to $19.85 Australian, despite reporting strong earnings and interim dividends. The energy major has declared an interim dividend of 30 cents per share for the first half of the year compared to 26 cents a year ago. The company also reported rebounds in profit, rising to 317 million Australian dollars from a loss in the same period last year, and revenue rose by 31%. Up to 2.5 billion Australian dollars, while production dropped to 46.3 million barrels from 50.1 million barrels of oil equivalent. Let's move on now to the next, and shares of Commonwealth Bank of Australia rose 1.6% to touch an intraday high of $100.57 Australian after the lender launched its new buy now pay later product, Step Pay. The move is being seen as a step to compete against local BNPL players such as Afterpay and Zip. The bank said that its customers who pre-registered for its BNPL product will be able to load the new card into their digital wallets from Wednesday. The bank will allow Step Pay to be used for purchases under 100 Australian dollars in one go, while purchases above 100 Australian dollars will be split into 4 equal instalments without any costs to the customer. And now we've reached that time where we will take a short break, but please stay with us for more of the shares that are in the news today.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With 𝐊𝐴𝐚 TV.
Welcome back. Sage here. You're watching 𝐊𝐴𝐚 TV live from Sydney, and this is the last show of the day, the last trade. Let's take a look at more of those shares that are making the news today. Shares of Domino's Pizza jumped 6.9% to hit a fresh 52-week high of $135.73 Australian on robust earnings. The company has also announced a final dividend of 85.1 cents per share, 70% franked, with an ex-dividend date of August 25th. The underlying earnings before interest and tax rose 27% in the financial year 2021, with 2/3 coming from its European and Japanese operations. Food sales surged 14.6%, driven by an increase in stores that included 126 new outlets in Japan alone. Next up is news from Silver Lake Resources, whose shares gained as much as 3%, up to $1.36 Australian after the gold miner unveiled its earnings reports. The profit after tax dropped 62% for the financial year ended 30th June 2021. The revenue climbed 5%, while earnings before interest, taxes, depreciation and amortisation rose 12%. Gold production stood at 249,177 ounces gold equivalent, with gold sales of 248,781 ounces and copper sales of 1,724 tonnes. The company said it has met the full-year guidance for both sales and all-in sustaining costs, despite the challenging conditions prevalent in Western Australia throughout the year. And also making the news in from CSL, an Australian biotechnology firm. Shares have dropped 2.1% to $291.63 Australian. This pairs the opening gains despite declaring record dividends. The healthcare major announced a final dividend of $1.61 Australian per share for the financial year 2021, its biggest dividend on record. Besides, the company reported a 13% rise in revenue, while net profit also grew by 13%. Going forward, the company expects a weaker performance in the 2022 financial year due to margins easing as a result of increased plasma costs. Shares of Nearmap gained 4.8%, reaching $2.16 Australian after the aerial imagery technology company released an earnings report. The company has beat its annual contract value guidance for the financial year 2021, which was driven by a solid performance in North America. The company ended the financial year with a group ACV portfolio of $133.8 million Australian dollars, registering a year-on-year growth of 26%, and the revenue rose 17%. The company, however, did not declare a dividend for the period. And now let's take a look at the next company. The share price of Deterra Royalties surged 3.7%, up to $4.47 Australian following an earnings report. And the resource-focused royalties business has reported revenue of $145.2 million Australian dollars for the 2021 financial year, while net profit after tax stood at $94.3 million Australian dollars. This is the first earnings report post-demerger of the business. The company has also declared a final fully franked dividend of 11.52 cents per share. And lastly, in this segment, shares of Tabcorp fell nearly 0.9%, down to $4.81 Australian after releasing its earnings report for the financial year ended June 30th, 2021. The group revenue rose 8.8%, while EBITDA was up 11.3% versus the last corresponding period. And now, before we take a look at the Asian markets performance, it's time for another short break. Welcome back and thank you for your company. Sage here and you're watching 𝐾𝐿𝐼𝐴 TV live from Sydney. This is the last show of the day, the last trade. And now in our next segment, we'll take a look east towards the Asian markets performance. Snapping a two-session loss, the Asian markets were trading higher on Wednesday, undermining weak cues from Wall Street, which declined overnight. The concerns about turmoil in Afghanistan and rising COVID-19 cases in the region limited the market's gain. South Korea's KOSPI was the top performer in the region, rising 0.95%. It was followed by the Straits Times in Singapore, which gained 0.9%. Taiwan's weighted stock index surged 0.6%, while India's BSE Sensex rose 0.5% in the opening trade. And moving on from Asia now to the US. Wall Street ended lower in the overnight trade as investors scaled down their risk appetite. The Dow Jones dropped 0.8%, the S&P 500 fell 0.7% and the Nasdaq tumbled 0.9%. And now we've made it to the last segment of this show. Let's have a quick look over the crypto market's performance. All major cryptocurrencies extended falls for the second day on Wednesday, with popular coins such as Bitcoin, Ether and XRP floating in the red. Traders seemed to have taken a pause after recent rallies and resorted to profit booking. Bitcoin, the world's largest cryptocurrency by market capitalization, dropped 3%, down to around $45,000 US. In the past 24 hours, the most popular currency moved in the range of $44,000 to $47,000 US. Ether, the world's second largest crypto, also declined nearly 5% to trade around the $3,000 US mark. And the coin has witnessed strong rallies last week after the Ethereum blockchain network updated its software called the London hard fork. In a similar trend, a little-known digital coin, Cardano, fell 5% to reach $2 US. This coin has become the third largest virtual currency in the world as network developers look to ride the boom in decentralized finance. Among others, Dogecoin, XRP, Stellar, Uniswap and Litecoin also traded lower. And that's all for now. In the last trade and with our existing operations in Australia, New Zealand, UK and Canada, 𝐾𝐞 Media has launched its operations in the US markets, and every day in our first show, the Global Market Roundup, you can get the latest and important news of the US, European and the Asian Pacific markets. So on that note, I shall see you tomorrow as close as possible to 10 a.m. live from Sydney. Sage signing off.